We're fighting a tough battle here. So
yes, we
hopefully
are.
In the end we'll win.
Well, howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Friday, November the 20th, 2015, and I'm very honored to have first-time guest, the founder of Sprott Asset Management, found at Sprott.com. He also has Sprott Money, Sprott Global, and a whole host of other asset management products and websites. And Mr. Sprott, you have assembled an impressive team, including John Embry and Rick Rule, just to name a couple. And a couple of the products that you offer that I've followed very closely are the Physical Precious Metals Trust, the ETFs, including the PHYS, which is the Gold Trust Fund, and the PSLV, which is the Physical Trust Fund, and the PSSS, which is the Platinum and Palladium Trust Funds. And I just really want to welcome you to the show. I'm very grateful for you to spend a few minutes with me. And I'm speaking, of course, of Mr. Eric Sprott. And Eric, how are you this morning?
Rory, I'm in good shape and always enjoy listening to your interviews. And I commend you on keeping your listeners informed. So I'm more than happy to have this discussion.
Well, I certainly appreciate the kind words. And there is a lot going on, as you and I were discussing just before we started the show, all over the world. And let's start with some of the global turmoil. I mean, why haven't the metals moved in response to the various global situations like Syria and Ukraine and the Middle East, just to name a few?
The markets are controlled, okay? They're controlled by the commercial bankers. And what they want, they typically have gotten. And we've seen such a classic example of this in the run-up to 1190. The certain group of investors came in to buy gold contracts, and literally the bankers shorted them every one of those contracts. And they bought, I think the purchases were like 80 to 90,000 odd contracts. And the commercials just shorted the 90,000 contracts. And of course, the people came in as buyers because of the non-increase in rates in the September Fed meeting. And then, of course, we get the October discussion, and then we talk about an increase in rates in December, and they use that as the premise for knocking down gold. I mean, it's kind of getting to be an old premise, Rory. I mean, This has been going on for 5 or 6 years now. You know, I'm going to raise rates and gold should go down. Well, my God, it's gone down $800. There's been no rate increase, right? I mean, I don't know how long they can keep working this story. But the reality is that the commercials dictate the market price. And of course, what we've seen in the last 2 weeks is the commercials have totally repurchased all the shorts that they put on. And we don't have a report for the week ending this last Tuesday, which will come out later on in Friday afternoon here at 3:30. But I would guess that having taken it down through the old lows or 5-year lows, that the commercials have probably gone net long here, is my guess. And as you know, on Thursday, the price of gold went up $11 for really no reason, although I can give you a possible reason. But I think the real reason is that the commercials have done their deed. They got all the speculators to unload their longs, which of course the commercials bought, having scooped up $50 to $100 a contract. And I'm sure that they've probably gone net long over that process from when the September meeting minutes were out, or the September decision, till now. They've probably gone net long gold, but the price is down $100 from the high. So, to your question, why have geopolitical events not had any impact, is because the commercials haven't done their thing yet. But once they've done their thing, we'll see that, the price of gold will go up, and perhaps the geopolitical events will take on more meaning. As you probably know from your years of studying gold never does what it's supposed to do, because we never want to attach a real reason for it, a bona fide reason, right? So if there's a reason it should go up, it typically goes down. because nobody ever wants to attach economic weakness to gold strength or the currency this to gold strength. There can never be an equation. Every time you have sort of that equal line, the line goes through it. There's no linkage, and they just keep everybody offside all the time. So it's just the commercials doing their thing, which is totally illegal, and should end. But that's the situation we have today. That's basically unregulated in my mind.
It's completely unregulated. I mean, the regulators, as we saw with Bart Chilton and Gary Gensler, I mean, they just played right along with the bullion banks, and whatever they wanted, they got. And and their supposed 5-year investigation into manipulation turned up absolutely nothing. I mean, it's a joke. But I think that.
Well, I think was it Rory to correct that what they said was, we don't have a legal case here. You know that Bart Chilton, before that announcement came out, said there are things that look like there's illegal activity going on in the market. That's before they came out with the decision, right? So then the decision comes out saying, well, we don't have a legal case. Well, we don't know why they don't have a legal case, but it doesn't mean that nothing was going on. Just to make that point, I'm sure lots of things were going on, but for whatever reason, they couldn't file a lawsuit. But maybe that will come later.
Well, that's just lawyer talk. I mean,
exactly.
That's all that is. So, China, I want to bring China into this mix because, as you are well aware, I'm sure, they have plans, and I thought that they were going to release it by the end of this year, but we're getting pretty tight on the year end. They are supposed to be setting a pricing mechanism into place. And do you think that or what impact do you believe that will have on the market as far as the COMEX, or is it just going to be business as usual?
Well, there has been discussion of that for quite a while, right? I mean, that started 3 and 4 years ago and never seems to quite transpire when we would like it to, including the start of the ABX exchange, which is part of that whole process that, it was suggested would start before the end of this year. It doesn't look like it'll start before the end of this year. Although I believe when it does start, if you have a truly physical market, I think it would make a huge difference. I've said for years that the demand for gold in the physical market is way beyond mine supply. We see it more and more all the time that the physical demand is well beyond the physical supply, but of course the paper runs the price, unfortunately. And so I think if we could get an exchange started, it would make a dramatic difference to the way gold is priced. But I don't know when this is going to start. It keeps getting delayed, and you keep your fingers crossed, but nobody really knows when it will manifest itself.
Well, we can only hope that it's more sooner than later.
Yeah, that's it.
You are heavily involved, and I'm not sure to what extent, but I know that you keep a close eye on the mining operations, and that you are vested in some mining operations. And with mining operations closing or shutting or slowing down, and now China is officially removing gold from the open market, India has their insatiable appetite for gold, and that's not waned one bit. And Russia is steady as she goes with their monthly acquisitions. And I have a 3-part question for you, Eric, and this is one that I ask of everybody. And where is the metal coming from? Where will it come from over the next few years? And what will it take for the precious metals to get a foothold on higher exchange rates?
Sure. Well, where's it coming from? Let's go back. I'd like to go back to 2013. When I think in 2013, there was a shortage of gold. And from the commercial banker's perspective, the central banker's perspective, more appropriately, they had to do something. And of course, what they did is they pushed the price of gold down dramatically in what was described as a 7 sigma event, something that happens once in every 300 million lifetimes, the amount that gold went down. At the same time, they convinced the Central Bank of India to massively restrict gold imports, such that, the typical 80 or 70 tons a month that they imported got as low as 7 tons in November of 2013. And in the process, they stripped something like 700 or 800 tons out of the gold ETFs and trusts. So between knocking India's demand down by, an annualized 600-700 tons and taking the gold out of the ETFs, they were able to supply an undersupplied market. And I think by dampening the price, the enthusiasm, of course, for coins and bullion bars and things like that was a little tepid in 14. We've seen that change in 15 in the sense that the coin demand is really starting to surge, both for gold and silver.
Yes.
In fact, the gold coin sales this month, as announced by the U.S. Mint, are already 130% higher in November than the whole month of October, and threatening to be the best month ever. I mean, they're up at 80, I think it's 81,000 ounces, so they're very strong. Silver sales are very strong. Of course, I think what will happen is the Mint will come out and say we don't have any more, and of course that will cause the sales to just flatline here. But it looks to me like the demand is coming back in 15. We see a data point that we didn't see before, where China announces they're buying approximately 15 tons a month,
yep,
which has only been announced for 3 months so far.
Exactly.
That's 180 tons a year. It may not seem like much, but it is about 6 or 7% of mine supply that was never accounted for before,
yep,
which now the World Gold Council always puts out these, in my mind, very poor statistics every year and always shows gold being in balance, which I've never believed the data. Now they got to account for an extra roughly 200 tons in China while mine supply is going down. So you got a guy coming in buying 5% of the gold market when supplies is static, and the price of gold keeps going down. And of course, we see how this is being covered to the next part of your. How do they cover it even now? We see data out of the UK where they have these huge exports into Switzerland, and of course, in turn, that goes over to China. And the UK doesn't manufacture or produce any gold. They don't. So where's it really coming from? Why is the UK getting importing all this gold that they then send off to the Swiss refineries? They don't make any gold. It has to be coming from central banks somewhere, the U.S. Fed, other means of getting it, whether it's Venezuelan gold or whichever country they want to pick on next, where they pick off the gold. But sooner or later, the data is suggesting we're going to have a shortage. I mean, there's just no doubt in my mind that we are getting very, very near that point. And of course, they've stripped the COMEX of 98 tons this year, so that's helped to assuage the shortfall. They're probably, I just think they're groping to get the last remnants of gold to keep things in balance before the whole thing explodes. Now, a lot of us have thought that for quite a while, as I am certainly one of them. And the central banks certainly had gold that they could lease into the market. But I got to believe that those central banks are getting down to fumes in their inventory by my calculations. So I think I've always thought our day is coming. It keeps getting delayed, but all the physical data suggests that we're going to win this battle.
How's the dollar going to survive once China and Russia have all the gold? I mean, China's already making moves to get away from the dollar. Russia has said it's outlawed. You can't even use it here. And the partnership that is developing between China and Russia, that's going to be a real force in the currency market and in global trade. And if they step up, and I personally believe that they will, in my lifetime, I believe that they're going to attach gold to some form of currency, whether it's the ruble or the renminbi or some combination of the two. What are your thoughts on that?
Well, there's no question. They both categorically stated and have acted on Russia selling their treasuries, buying gold. China's selling their treasuries, buying gold. Probably understated purchases of gold. Rory, the one thing I always fall back on, it's so obvious that the U.S. is broke. I've said that a million different times. Using their own data.
Using their own manipulated data.
The 65 trillion of unfunded obligations that they have to announce under their GAAP accounting policies here you get this $18 trillion GDP engine that probably loses $1 trillion a year, and the present value of the unfunded obligations goes up by 4 or 5 trillion a year. Well, you know exactly that they can't pay off the debt and the unfunded obligations from a GDP engine that loses money every year. It's just absolutely impossible. But because they get to print money, and they get the central bank to buy the debt, no less, they keep delaying the time when that happens. But if I was in China and I looked at this data, I know what's going to happen. I know what's going to happen to the U.S. dollar. I'd be getting out of my Treasury securities as fast as I could and moving into some currencies that's going to survive. And I'd be doing the same if I was Russia or the Mideast or any other thinking country, because the writing's on the wall, right? You can't avoid it. And the analogy I always make, Rory, it's like Detroit. We all knew 10 years ago Detroit was going to be broke and 9 and 8 and 7. And finally they go broke. Big surprise, right? Because the unfunded obligations kept getting bigger all the time. Well, the U.S. unfunded obligations keep getting bigger all the time. There's just no doubt that they're going to have to renege on something. And whether it's, we're not going to pay you Social Security, we'll pay you half what you thought you were going to get. I mean, it just adds up to ruination. And think of, the gutting of the industrial production capacity in the States. I mean, it's just sickening to see what sacrifices we've made to keep stocks going up and multinational companies, moving operations around the world and out of the United States as though it's some kind of good policy. It's a joke.
It is a joke.
It's just not good. So, ultimately the U.S. dollar will die the same death as any fiat currency. It'll be valueless. It really, truly will be valueless. And it's one of the reasons that you have to own gold and silver. And of course, if the U.S. dollar is valueless, the banking system collapses. You don't want your money in the bank. You want it in gold and silver. We've all gone through that before, and it's becoming closer every day.
And last question. We're already hearing reports that we should brace for a terrible holiday spending season here in the States. And Obamacare, it seems, is about to wipe out any loose change the American consumer would have in 2016. And how do you see 2016 getting started? I mean, as far as, is it?
Sure. Well, Roy, it's funny. You've hit the nail on the head. It's about healthcare. I mean, healthcare is already a huge cost for everybody. And when people get their notices of what their fees are going up by in the next year, where you're already spending, let's say 18% of the typical consumer's budget is spent on healthcare, and you get an increase of 10%. There's inflation of 1.8% right there, even though theoretically we have no inflation. And people are getting notifications of 10s and 20s, and, I hear 50s. We got these co-ops closing in many states. We had the biggest insurer, United Healthcare, yesterday saying that probably by 17 they'll get out of Obamacare because all they do is lose money on it.
Yep.
I mean, you've hit the nail on the head. People are receiving these notifications saying, how am I going to make ends meet here? It's bad enough already that, people are living paycheck to paycheck and getting no wage increase. And then all of a sudden you get this thing thrust in front of you. I mean, and of course you hear some of these, who was it, Nordstrom, that said, oh my God, starting in August, we noticed that in all categories and all this and all that, the interest in purchasing areas was way down. Well, you know what? Everybody, all your listeners, if they're American, are getting these notifications. And it's not just the premiums. It's the deductibles.
Exactly.
It's the copays.
Mm-hmm.
I mean, we're probably got 4 or 5% inflation just from healthcare down there. So the U.S. economy cannot grow with the out of control healthcare system that the U.S. has. It's just impossible because we all read the stories about these stupid, drug price increases of thousands of percent. I mean, the companies are just ripping the government off. And of course, you rip the government off, you're ripping the people off.
Exactly.
Ultimately, because we got to pay for it.
Right.
So
those are my dollars.
Yeah. Well, the economy can't improve. And of course, it's interesting that even in, ever since the NASDAQ crash and the financial meltdown, what does the government do? The government takes interest rates to zero, try to boost housing, try to boost car purchases, They allow EBT cards to come into being. 48 million people get food stamps. They make student loans available. All these things let the economy stumble along. Without those things, this economy would have crashed long ago. So the government's always in. Now they're talking about, zero down payments, and Fannie and Freddie are going to reduce this and reduce that to keep it going, okay? Because most of the growth that we have, particularly which has been in housing and autos, it's essentially government stimulated.
Exactly.
And we get people to buy things and own things that can't afford them. I was reading that just last month, I think there was an increase of 110 billion in auto purchases on an annualized basis by people with what they call FICA scores below 600, i.e., they can't afford it.
Right.
Well, 110 billion is 0.6% of GDP, and that's how we keep it together, because we hardly have any growth in GDP as it is, right?
Right.
But between the cars are probably accounting for it, or the houses are accounting for it, the student loans are accounting for it, or the EBIT cards are accounting for it. But there's really no growth there. I mean, all you got to do is look at what IBM is doing and what Caterpillar is doing. I mean, it's a wipeout. And now you got all these retail guys reporting crappy sales. I mean, it's a tough time out there. So there's never been a real economic recovery. There's been something that's allowed it to sustain itself, but by everyone, including the government and the central bank, increasing their debt. We all know what happens when you increase the debt beyond the limit where you can service it. Well, then the debt has to stop growing, and your economy collapses.
Exactly. And everybody's been harping on China as far as saying that China's crashing and that they're going to hell in a handbag and all this stuff, and that they're printing money as well, and you've got all this government stimulus that is exactly like QE over here. But there's a big difference in that when China prints money and stimulates the economy, they have something to show for it. They have rail lines, they have solar energy, they have another factory, they have nuclear power plants, they have all of these things, all this stuff that you can reach out and touch. Whereas in the United States, what do we have for the stimulus? We have cars that are going to be bust in 5 to 7 years. Exactly. We've got student debt that you were talking about, and we have an overinflated, about to crash and burn housing market. I mean, there's already signs in Colorado. Dave Cranswer, who lives in Colorado, says that market's already going belly up. San Francisco, there's information coming out about that whole market is just completely on the level of stupid as far as the way that they're above the crash levels. And
we shouldn't forget that by keeping the stock market propped up, it helped a certain segment of the population.
Exactly.
Right? I mean, the market's gone up by $5 trillion, which has allowed somebody to spend money. But it's interesting. This year, the stock market hasn't gone up. And it's very vulnerable here because we're living off of M&A and buybacks and things that in the long run can't carry on here. You can't keep buying your stock back when your business is deteriorating and your profits are going down. So we're setting up for things to not work out well here. I mean, many of us have predicted these things, and they keep pulling another rabbit out of the hat for one thing or another. But ultimately, we all know what's going to happen. Just like we knew Detroit would go broke, we know what's going to happen here. It's a question of, when it manifests itself. But it's getting more dire by the day.
It really is. I mean, it feels like we're on the edge, but it's felt that way before. But this time, it feels a little bit different because the lies aren't working as well. The QE isn't, as you just pointed out, has stopped working. The stock buybacks, in my opinion, is a huge red flag because you don't have a publicly traded company if the president and board of directors are the only ones that are buying the stock. I mean, it's just that's not realistic.
Yeah.
So, I mean, it's just
there's lots of signs of that.
Yes. Well, where do we go from here, Eric? I mean, as far as the individual, other than If you don't have gold and silver, then shame on you. Go and get some today.
Well, I've been a huge believer in that. I mean, the market, when we had the 2000 crash, it just should have fallen apart. And then we come out with new home buyer tax credits, cash for clunkers, whatever the hell, student loans. These are all meant to hold it together. And then it did crash in '08, of course, because the whole banking system was way too levered. And now we got zero interest rates to hold it together. We got printing of money to hold it together. The printing of money for 25 years in Japan never worked. It's not working in the United States. It's not working. You're not working anywhere, okay? It's just something to keep the financial markets held together so that when you pick up the newspaper, it sounds like everything's okay, but it's not okay. It's the central planners that are keeping the paper markets together. It just more and more raises the level of need to protect yourself. And of course, as you would recommend, and I would recommend, and I've been in gold since 2000, you just got to own the stuff, okay? The COMEX nonsense will end someday. You see what Russia and China, the Indians are doing. You see the flow of money going from east to west here. It's just a matter of time. It's all going to happen. And, there'll be a day when there's a huge payday or they'll shut the COMEX down. Who knows what the hell they'll do. But the reality is that owning precious metals will have its day, as it had a wonderful time from 2000 to 2011.
Yep.
A wonderful time. It went up by 600%. The stocks went up by, I think, 1,700%. But we're ready for another one of those.
Yes, we are. And this is my absolute final question, then I'll let you get back to your morning. And what motivates you, Eric, to do what you do? I mean, you've obviously amassed, a great sum of wealth, and you're in very good condition financially. What motivates you to continue doing what you do?
Well, investing is a bit of a game. You have to try to be one step ahead of people. And if you can get that one step ahead of people, you can make an outsized return. So, for example, from 2000 to 2011, the outsized return was in precious metals and precious metal stocks. And then all of a sudden, along comes the beat down because they were going to start printing and they had to have gold go down because you can't print and have gold go up. Okay. You can't have that equal sign, right? That's not allowed to happen. So gold goes down when they start printing because that's what they had to do to make it seem like it was reasonable and stocks go up. We're printing everything. Look, everything's okay. Everything's normal. But ultimately, as a student of supply demand in the market, if you just realize what's truly going on, you truly realize that the physical demand exceeds the supply, that the central banks have supplied the difference, in time what's going to happen, okay? And yes, we've had to suffer terribly in the last 4 years. Myself, not as badly as, let's say, an American resident. I'm a Canadian resident. Our currency got beat up, so gold's not so bad in Canadian dollars, not so bad in Australian dollars, not so bad in Brazilian cruzeiro. There's lots of things that lots of countries where gold's doing just fine. Maybe even in the euro this year, gold's probably up. But it's been very difficult for an American investor to hold on. The sector's had the pulp beat out of it here. The things that you can see that you can buy. I just can't believe when companies come in to see me. I say, okay, just tell me your market cap somewhere between 1 and 5 million. What is it? Because there's absolutely no interest in these things. Guys been out exploring, probably spent 10 or 20 or 30 million in his property, and the market's valuing it at $1 million. Just truly backwards. So I think there's opportunities for people who believe in their own analysis and have the fortitude to stay in there and press the bet. I think, pressing it's a tough thing to do, but I can certainly say to you that in the last year or so, I pressed the bet. I ended up buying a mine in Nevada. I become the key shareholder in another one. So, I keep going deeper. Maybe they'll have an obituary for me someday, but I don't think it'll be because of gold, okay?
Oh, no, I don't think it will be either. I'm sure of that, unless it's just the sheer weight of it.
Yeah, right. He got buried in gold. It got so cheap he bought it all.
Oh my goodness. Well, at least we'll leave him with a good laugh there, Eric.
There you go.
And we've been speaking with Eric Sprott, and you can find all of what he has going on over at Sprott.com and Sprottmoney.com as well. That's where you'll find a lot of the news articles that we republish over at the Daily Coin. And Eric, it's been a real pleasure speaking with you, and I certainly hope that we can do this again in the future.
Well, Rory, I've really enjoyed it. I've enjoyed listening to your interviews every week. So keep up the great work, and I'm sure our day of celebration is close at hand.
I feel confident. So, well, you have a wonderful morning, and I'll speak with you soon.
Okay, thanks, Rory. All the best. Bye.
Bye-bye.